Good morning, Sense of Things. This is Jeff and Ron here once again for another update on what's going on in the world, what's going on in the markets, and hopefully a little humor and information for you as well. Ron, how you doing, my friend?
Good. Kind of slow news-wise. Most of earnings season's over.
Yeah.
Not a lot on the economic front. Saturday is June, if you could freaking believe that. And then the political season heats up, so it'll be time to turn off the TV and all the websites, so we don't have to see any of that garbage.
I stopped watching regular TV years ago. So we just watch, basically, I watch old shows that have been around for years and binge watch old shows. So it really doesn't change much for me there. And it just makes me mad to watch the news in the morning. So
Yeah.
it's just,
Well, the news, look, if it was all good news, nobody would watch it. They know
yeah.
bad news sells.
Yeah, absolutely. So yeah, it's crazy. One of the things I watched this week, I was interested in ever so often. I just look at what happened this day in history and all that. And I found some unique things, some very cool things that actually happened this week in history. So I wanted to
Okay.
share that with the audience here. Let me share my screen. So this was probably the most interesting. I just happened to pull it up, and it was
Sure.
yesterday. Edmund Hillary and Tenzing Norgay reached the Everest summit, the first people to reach the summit of Everest in 1953, this week in history.
And without a map, because all the people that came through since have at least had a map on where to go.
I've had a map, and those guys did it with very little oxygen and all that. I mean, it
And
was
less
pretty
tools
impressive.
and less supplies.
Yeah,
Incredible.
literally, yeah, and not a 40,000 people that were down there as a support team for him as well. So
Yeah, there was
extremely
no
impressed.
command
That
post.
the last person I was impressed going up to Everest at this point. This week in history, 1940 or 1848, Wisconsin enters the Union, and now we had cheese as part of our 50 states.
And
That
milk with your steak if you go into a steakhouse there,
milk
because we
with your
need more
steak.
dairy with our steak.
Yes, awesome.
I never understood that.
1917, May
Yeah.
29th, 1917, Mr. John F. Kennedy was born, future president of the United States at that point.
And the baseball player Ted Williams was born that year too.
Really
Yeah.
did not know that. 2003, Bob Hope celebrated his 100th birthday on May 29th of 2003. They actually renamed Hollywood and Vine Bob Hope Square as a result of him. So interesting there. He did die July of that year, so he at least made it to 100. And then last but not least, this Sunday was the Indianapolis 500. It was the 108th running of the Indianapolis 500, and it began in 1911, this week in history.
Have you ever been to the track? I was at the track. I did the tour. It was very interesting.
It is, yeah, it is one of my absolute favorite tracks in the world. That one in Willow Springs, and a couple of others are my absolute favorite. But yeah, it's just such a neat core, and just the history of it is just absolutely
I
amazing.
love the museum. Yeah.
Yeah, yeah, it's really cool. Okay, so as you said at the beginning, really not a whole lot of things going on. We're coming to the end of earnings season. What I thought was interesting this week, some earnings came out. It was interesting that and for purposes of total sharing with the audience, I do own three of these. So this is part of why I was paying attention. But we've been talking about the consumer, and we've seen almost like a trade down into retail from the higher end stuff down into the lower end, the Walmarts and the Dollar Generals and things like that. So that's been an interesting trend. However, this week it was actually an interesting thing from a point of view of like Abercrombie and Fitch. That's what I wouldn't consider it a high end retailer. I wouldn't consider it a low end retailer. They're just middle of the road. Blew out earnings this week, blew out earnings and revenues off the charts. So regardless of what's going on with the consumer, there are companies that are really getting their stuff together. I think Dick's Sporting Goods is another really good example of that.
It's interesting because retail's all over the place.
Yeah,
There's other retailers have fallen flat on their face. Home Depot CEO came out a couple of days ago and talked about how weak the consumer is getting,
yeah,
and they guided lower
yeah.
for the balance of the year. Home Depot is a pretty good barometer for what's going on
Well,
with
and I think
consumer
it's a
too.
barometer for the I think real estate sector in general,
Well,
because
and
with the
developers and
lack of,
everything.
you have so many people that are staying in place in their homes because, hey, if I'm going to go and I'm going to move, I'm going to leave my nice cushy 3% mortgage and go and get a 6 or 7% mortgage at that point. I think a lot of those folks also had been the ones that stayed in their places and said, you know what, I'm going to upgrade my house, I'm going to do a lot of fixing up. They're done with that now. So it's an interesting cycle when you have a slowdown in real estate like we're seeing. One, that doesn't look like it's going to change anytime soon. And I think one, it is that consumer saying, okay, I just don't have the money to make these major renovations to my house. But I think a lot of it got front loaded during the pandemic, and we're seeing the end of it now where, okay, people aren't doing big bathroom remodels, they're not doing all that stuff that they did a couple of years back. What's your thoughts?
You're 100% correct. In a way, you could do it. Yeah, they pulled the demand forward post
Hmm.
COVID and even since then. And you're right, because of the high interest rates, if people aren't moving, they're investing in their own homes. Because if they do want to sell one day, as we all know, houses are money pits. You got to put money in it at some point. I will tell you, Advanced Auto surprised me because I do have some clients in it,
Yeah.
and it is a turnaround story. The C-suite completely changed in the last year and a half. And literally, this stock fell off the map before the C-suite change, and it has come back nicely.
Hmm.
But this is another interesting thing because I got two left hands when it comes to a car. But people that keep up their own cars, they go to Advanced Auto Parts and
O'Reilly and yeah,
all of those, O'Reilly and a few of
yeah.
the other Pep Boys, and they go there and they get it, and that's going to continue to happen because
Hmm.
cars are so freaking expensive right now.
Yeah.
So people are putting money into their cars to keep up. And as you know, as opposed to a house, cars need a hell of a lot more maintenance than a house.
And I was hearing something the other day. The average age of a car now is like 12 years.
Yeah.
So I don't feel so bad because I keep cars forever. And I'm like, okay, that's fine. For the first time in probably 10 years, I've got two cars that are less than 10 years old at this point, but I've still got my truck that I've had for, God, it's 12 years. I've replaced an engine in it. The thing's going to last forever at this point. And that was a perfect example of, not that I couldn't afford it when 2020 was rolling around and I was having problems with my truck. Honestly, it was cheaper to, every truck that I looked at that was used was more expensive than, it was basically worse than my truck at the time. And it cost a fortune. For 6 grand, I replaced the engine, transmission, and rear end. And so it's basically a new truck with an old outside at this point.
Hey, if I could go to Advanced Auto Parts and replace my rear end, I'd do it too.
We all have said that. I think another interesting one has been Kava. I think they're in the right place at the right time. It's a relatively new stock, but they are just knocking the cover off.
You know how those work. Remember when Shake Shack came out?
Yep.
Unless they're saying we're adding 50 new locations or 100 new locations this year, the profitability is secondary to the high growth, which is ridiculous.
Yeah.
But once they get to scale, now it's all about profitability. Prices go up and the consumer suffers.
Yeah.
But
Well,
I get what you're saying
the
about Cabo,
interesting
though.
thing about them though is they're actually been profitable, really profitable, and their revenues have been good. So I mean, that's the
Right, but that's
interesting
what I'm
thing.
saying. Now it's a growth story, not a
Yeah.
profitability story.
Yeah, absolutely. A couple interesting ones too. Bank of Nova Scotia, Royal Bank of Canada. It's not something we talk much about here in the United States, but I mean their revenues were off the charts, huge. Each of them.
Remember, Canada only has six banks, seven
True.
banks, something like
Yeah.
that. And their banking standards are much different than ours.
Mm.
And as far as loans, as far as cash position, things like that, they're typically always in much better shape than the majority of our banks,
Yeah.
especially the small banks and the regionals.
They just don't have a lot of small banks and regionals up there. That's the the truth around the world. You look at any other of the countries around the world, pretty much it's five or six big banks in each country, and that's it.
Well,
So
and from what I understand in Canada, to try to get a banking charter is near impossible
yeah,
because of the standards they have that they wrap a fence around. If you don't have this, you can't have a bank, which is good for the consumer, which is good for the lack of loosening of credit to people that shouldn't be getting credit. So,
correct.
you know,
Yeah, I think the only challenge with that, and that's the one thing I do love about our system here, is that regional bank is the one that banks you for, especially for businesses. Those regional banks bank the businesses, which if you were dealing with a bunch of big banks, they may or may not bank, they may not take the risk on small companies,
yeah.
which I think that's the beauty of our system here in this country. Another big one on the downside this morning, Salesforce came in just ugly, and that's a rarity for them.
First
Um,
revenue miss since
yeah,
2006.
yeah, it's always consistently. I think it'll be one of those ones to look at because I think the response was outlandishly huge on the downside.
I'm looking for another 40 or 50 point downside before it's a buy.
Yeah, yeah, and it's one
Possible.
of those. It's what when I look from an option standpoint, it's what I call a sunrise or what's called a sunrise demise. And yeah, I think it's going to get whacked for a while, just from the simple fact of I think I haven't listened to the earnings call yet, but it'll be interesting to see where they're coming from that perspective.
Well, remember, I was in that business for many years,
Yeah,
and for the most part, it's based on users.
yeah,
So if companies are laying off, then they don't need as many licenses, and that reduces their revenue year
that
over year. So that could
absolutely
be
correct.
another canary to look at is, wait a minute, if user licensing is going down, now there is competition,
Hmm.
but Salesforce tries to make you sticky and can't get off that platform.
Yep.
So maybe the companies aren't getting off, they're just reducing the amount of
They're
people
just
that are off.
reducing staff. Yeah, exactly. And you're starting to see that. I was listening to one of my recruiters that works out of my office here, and he was having this conversation. And he was talking about how companies are starting to cut things like sales training and things like that as it gets tighter, which means that the salespeople may be the next people to go at that point, which is starting to cut your own throat as you start cutting sales force down.
Salespeople producing, you don't get rid of them.
Yeah,
So maybe they just overhired. Who knows?
yeah, could be. Couple things this week. Real GDP came in. This is the second read. So for those of you that don't know, during a quarter, there's three different reads on GDP. So there's a first read, a second read, and then the third and final read. So this one is indicating still, and I think it's very likely it's still going to continue to be that way, a drop in GDP. As the previous quarter was 1.6, this quarter is reading twice in a row 1.3. So it is GDP slowing a little bit, still moving positive. The big thing I think for this week is, and this is really what the Fed looks at, is PCE, so personal consumption expenses. They don't necessarily look at other factors like CPI and things like that anymore. They typically look at PCE. And I think that's going to be a big number. It'll be coming out on Friday this week. We'll report it next week, but it'll be a big one to look at because although it has come down, it came down from a high point of 5.5%. It is still persistently hanging in there around 3. And it's been slowly eking its way back upward. So this is going to be a big one because that is the indicator of, okay, is the Fed going to do anything with an interest rate change? I personally think it's going to flatten out or maybe go up a little bit, which that pretty much takes an interest rate drop off the table at this
Yeah.
point. What's your thoughts?
When all these numbers come out, unfortunately, it's a headline number, right?
Yep.
PCE, here's the number. The problem is that you and I don't have the time to do this. You got to dig down into the
Yeah.
numbers. You got to know what it is because you may see a number that may be a good reading, but the underpinnings of that, of how the sausage is made, may
Yep.
not make sense. And from the smart people that I do follow that literally do an autopsy on all this stuff, there everybody sees the cracks widening. I mean, nobody
Mm.
has the timing on it, but
Yeah.
until you really see leveling off of a lot of the numbers, where you're not seeing major gyrations in some of the numbers, that's really what it comes down to. But PCE is they say it's the Fed's favorite number over the CPI. I
Yeah.
get it. I truly do. But as you know, all the financial media, CPI this and CPI that, and it gets a little overwhelming even for the average individual. But the idea is, at the end of the day, to put a bow on it, is when we're looking at these numbers, how do we put that into the crock pot, synthesize a thesis to say, hey, this is what to expect. This is why, like we said it before, if I ever come back reincarnated, one of the three things would be as an economist. Because you can ask six economists what's going to happen 6 months from now, you're going to get six different answers.
Absolutely.
So you could get six economists to look at that PCE number, not the main number, but the internals of it, and get six different opinions. So how do you aggregate all this to say, okay, this is how I'm going to make an investment decision or an allocation on a portfolio?
Yeah,
It's very
yeah, it
difficult.
is. And once again, that number, that's the magic number. I think that's the misnomer that you hear in the news. Oh, the Fed's looking for 2% inflation. They're looking for 2% on the PCE, and it ain't anywhere close. It's still running at basically 3 at this point. So they got a long way to go to get down to that 2, which it's been running that back all the way into the early 2000s. It's been running at that 2%, between 2% and 1%, back up and down, and it's got a long way to go. And this is like that last 10 pounds you're trying to lose. It's like next to impossible to get that going. It's a lot of work that takes to get that PCE down again, and I just don't see it happening anytime soon.
And a lot of the Fed governors come out again. We've been saying it for a year. What have they been saying? Higher for longer.
Yep.
They're still saying that.
Yeah.
And forget about the 2% target for the CPI. It's all the other numbers.
Yeah.
All the other numbers that go into that crock pot that's saying higher for longer.
Yeah.
If the economy is still running hot, and more importantly, people are hired and they're spending money, there's no reason to reduce it.
Yep.
Which is not good for certain things. I realize that. But the idea is you don't want to make the economy too hot.
No. And, I think the higher interest rates across the board, the interesting thing is companies now have gotten used to it and they've absorbed it. So you've still got companies that are making their earnings numbers. I thought that was the thing that everybody said, oh, it's gonna cause companies to just blow up. It isn't. They've adjusted to it. They know it's going to be higher for longer. So they've just worked around that. I think now it's really going to be that consumer, which is a major part of our economy. Yeah, if we see increases in unemployment and things like that's really where that'll accelerate those cracks more than anything.
Here's the difference with the businesses, and we can wrap up on this. Businesses borrow to expand.
Yep.
The reason why there's not a lot of business borrowing, throw out real estate, business borrowing to expand a business or whatever, is because things are still good for them.
Yeah.
The revenue's coming in. They have profits. Out of those profits, they can use those profits to reinvest and expand. When are we going to see businesses borrow money? When there's a downturn in the economy. Yeah. And they're like, hey, let's invest on the way down. We'll do better on the way up. And that's the way the smart businesses do it.
Yeah.
Because it's just too expensive to borrow money today.
Sure.
When rates go back down to 1 or 2%, if we have a major pullback or a recession, that's when you're going to see business borrowing skyrocket again.
Yeah. And it's just not there. You had a lot of borrowing going on over the last, let's say, 7 to 10 years as rates were so low. Big companies were borrowing, but they were borrowing to buy back stock. At that point, they weren't necessarily
borrowing only at 1 or 2%. That's free money.
It's free money basically to be able to go in there and increase your stock price and everything else. Interestingly enough, and we'll leave on this. Interestingly enough, the meme stocks. I was hearing something about the what is it? Oh, good. I went down this path, and now I GameStop.
With the stock,
yeah, GameStop.
AMC.
Yeah, the meme stock shot up. GameStop. They
right back to where it was.
Yeah, and they sold a whole bunch of stock in the market, made like 900 some odd thousand or $900 million or something like that, and they're using that to reinvest back into their business. So
they did that last time too. Actually, they did it to pay off debt.
Yep. Yeah, this time they're doing it more for like expansion and adjustment to their business or whatever. But yeah, it's hilarious with that, and you just wonder if there's some collusion going on out there with
Well,
some of that
GameStop
stuff.
will be around in some form or capacity. Movie theaters are going to go the way of drive-ins,
Yep.
unfortunately.
Yeah. It makes sense. Honestly, I've been to a one movie theater in probably 3 years. I just don't enjoy it. And half the time I
Got to be
fall
a good
asleep.
movie to make it worthwhile. I've gone to see two.
Yeah.
One of the Mission Impossibles and Top Gun Maverick,
Yeah.
which
It's
were
really
great
those,
to see in the theater.
yeah, those big ones where it's something big. Other than that, I'm like, it doesn't really excite me to go to see the theater anymore.
When the movie comes out in the theater and then it's back on streaming 2 weeks later,
Correct.
why did I do that? If it wasn't for why would I go see a rom-com in a theater? Come on.
Correct.
Yanked there by my
You know,
girlfriend. It's
you
not going
go
to work
watch
out.
rom-coms. Come on. No, you just stay in your house and watch them. But yeah.
Yeah, all good.
All right, folks. Thank you for joining us once again. We're trying to keep these a little bit shorter and give you just good, quick hits of information. Please make sure that you hit that up like button. Let us know that you're out there. We love that. And please make sure you subscribe to the channel. We love having more and more of you. We've seen a bunch of subscribers coming in over the last month or so. So we're really excited to have all you new folks in and really want to make sure that we're putting out good content for you. So thank you for being out there, and we will see you back here the very next time.